Hi, it's Nero here from Investment Rise, and by now you've probably heard that Elon Musk has successfully taken over Twitter, and that's caused all sorts of controversy and all sorts of consequences. But here's an interesting one for you. Elon Musk, by taking over Twitter, has actually broken the Dublin property market. Why? Because he's aiming to kill work from home. But if people can't work from home and they've all now got to come to the office, they've all got to move close to where they work. But where are they going to live? In Dublin, it's Elon Musk versus the housing market. Bloomberg. At Twitter's European headquarters, surviving employees have one big problem with Elon Musk's demand that everyone must return to the office: finding somewhere to live. Dublin, the Irish capital, where the tech firm has an office that had about 500 employees, is in the midst of a housing crisis driven by chronic undersupply of new homes and a mass exodus of private landlords. Prices recently topped the peak they reached in 2007, shortly before an economic crash that almost bankrupted the nation. Now, what has this got to do with the Australian property market? Stay with me and I'll explain. Musk's order prompted complaints on Twitter that it's impossible to simply move to Dublin and start working from the office. The article then goes on to say, although staff at Dublin's Twitter office has shrunk by about a third following the recent exodus, the spat is highlighting a growing problem for the Irish economy. Even if one has the funds to rent, one cannot rent, said Stephen Kinsella, a professor of economics and head of department at the University of Limerick. That's a systemic risk. Some big international firms are taking matters into their own hands. A company associated with Goldman Sachs Group Incorporated, which moved its European asset management business to Dublin after Brexit, is looking to build nearly 1,000 apartments on a shopping centre car park in northwest Dublin worth €400 million, according to the Sunday Times. IKEA's investment arm has committed €100 million to fund the development of more than 250 social housing units. So there's such a housing crisis in Dublin, such a shortage of accommodation, that private enterprises are now entering the fray and actually spending money to create accommodation so they can house their employees, so that their staff have somewhere to live. Dublin is no stranger to housing crises, but this one is very different to the bursting of the so-called Celtic Tiger bubble in 2008. Back then, it was all about oversupply and unsustainable credit. This time, the problem is that there just aren't enough houses to meet demand. And that's the problem in many places around the world where people want to live. There just isn't enough houses. There's an undersupply of accommodation, and that includes many areas around Australia. Plus, when you think about the fact that immigration is now increasing into Australia, so more people are coming into Australia, but we don't have enough accommodation, just like what we saw in Dublin, then how can property prices actually crash, right? They can only crash if there's an oversupply, just like what happened in Ireland during the so-called Celtic Tiger bubble. We don't have that situation in Australia. So therefore, for me, I can't see property prices crashing. Yes, they're wobbling around at the moment due to interest rates rising, but as the RBA starts to slow down its interest rate hiking cycle, and once they decide to hold firm on interest rates, I think you're going to start seeing property prices start to rise again pretty quickly due to the undersupply. Check out this article. Properties could rise as much as 12% if interest rates start to slow down. It's been a horror year for property owners, but there's a massive change on the horizon with prices set to skyrocket. Australia's housing market could rise by up to a whopping 9% in the coming year. Sydney will lead the recovery, and the New South Wales capital will experience the largest gains of up to 12% in its property sphere. That's as long as the Reserve Bank of Australia doesn't hike interest rates past 4% and then starts to reduce them in the second half of 2023. So with a significant undersupply of accommodation in many areas around Australia, with interest rates starting to slow in terms of how much they're rising, and with migration set to increase and already increasing, that certainly points to the fact that demand for property is going to keep exceeding supply, and that means that over the next little while, we are going to see property prices bounce back, not necessarily everywhere, and I'm not necessarily sure that Sydney will lead the recovery, but what I do believe is that property prices will start to rise and that there's a great buying window coming in early 2023. And if you like this video, subscribe to my channel and hit that notification bell. I'm going to share with you in a future episode data that backs up the fact that price falls are slowing. We're getting very close to the bottom of the market, and that the buying window, the best buying window, is about to come for many of us in many areas around Australia. But for now, the key takeaway message is, just like Elon Musk broke the Dublin property market by forcing people to come back to work and exacerbating the existing shortage, we in Australia have an existing shortage, and with migration coming into Australia, again exacerbating the shortage, making it worse, it's going to point towards property prices invariably rising in the future. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.